Let's start the conversation with this side of the Atlantic opening up things for a change, guys. And Nick, I'm going to ask you first. This UK CPI number, inflation hitting the Bank of England's target for the first time in almost 3 years, hitting that 2% in the year to May. That is down from 2.3% in April. So good news politically, and he needs it. Oh boy, for the Prime Minister with that target being hit. How have markets reacted to that? And I'm also going to ask both of you a bit later on how this may or may not affect the Bank of England's rate announcement tomorrow. But Nick, how are markets responding to this?
Well, you led with a good prompt there, Johnny, because when we take a look at the 2% inflation target that the Fed has, we talk about that all the time. Well, it's also the same thing for the Bank of England, and a lot of Western central banks kind of target that 2%, that proud number of 2% inflation. It's not too hot, it's not too cold. You want some inflation, but you don't want too much, and 2% is, as you mentioned, their target. So I think that it's only appropriate that the Bank of England is likely to, that the forecasts are for them to begin their process of rate cuts, which makes a lot of sense. Again, inflation has come down huge from a year ago today. A year ago today, the inflation rate in the UK was much higher than it was in the US at the same time. We've seen a huge come down in inflation from the UK and from Europe. And notably, the US had a big drop off in inflation when speaking, as a currency trader might look at this from a perspective of what does the US versus the UK look like. Well, the inflation rate has really reeled in the UK, whereas in the US, we still kind of see this sticky, stubborn, higher than 3% inflation that doesn't seem to want to make that last move lower. The UK, conversely, has made that last leg lower. The question is, did that last leg lower come at the cost of the economy kind of giving way a little bit in the UK, right? Retail sales numbers have not been particularly impressive. So I think that at some point, yes, the Bank of England will likely close in on a rate cut. And as you mentioned, we have a decision coming up very soon. We'll see if they do make that final push to begin the rate cut process, as we've seen started in the European region, right? The ECB has cut rates. Now the Bank of Canada has cut rates. So we're seeing this trend. And I think, the question of whether or not they cut is pretty clear. They're likely to cut. The question is, from a currency trading perspective, what about the other central banks, right? And what about specifically that U.S. Federal Reserve, who has remained a little bit cautious to admit their plan to cut rates? They've been hesitant. They've been waiting on the data to show improvement. Whereas, again, you compare it to the UK, they've seen improvement in the inflation department. They're seeing signs of a slowing economy. And as you mentioned, Johnny, it doesn't hurt that there's an election phase. I know that, bankers like to, clearly state that doesn't make any impact on their decision, but we're only human after all, and so are the people that are voting on these decisions.
But I would imagine, Kenny, very few people are predicting that the Bank of England will cut tomorrow. And in fact, you mentioned the likelihood of it, Nick. I mean, politically, it would seem obviously an advantage to the Prime Minister, Rishi Sunak, which may make them even less likely to go ahead with a cut. Most people are predicting August is going to be the month when they cut rates. Kenny, would you agree?
Yes, that's correct, Johnny. Just to pick up from what you and Nick were discussing about the 2% inflation reading, which is certainly good news, but there is a big but, which is services inflation. Inflation in the services sector is still much higher than that. It came in at 5.9% in April. It did fall to 5.7% in May, but that was actually above expectations of 5.5%. And these kinds of numbers are just way too hot for the Bank of England, which needs to see inflation across the board much closer to the 2% target. So that's one reason I don't think we'll see a rate cut tomorrow. The other thing is what you both mentioned about politics. There's an election on July 4th coming up in the UK, and the Bank of England doesn't want to be seen in any way is meddling or making major decisions during that time. So not only are they staying away from rate moves, but we're not even hearing any public statements from Bank of England members during the election campaign, which is leaving the markets in a bit of uncertainty about the Bank of England's rate plans. So August sounds like a good bet, but we're not really going to hear too much, at least from the bank itself, until after the election.
If you enjoyed this video from the Market Insights Market Pulse podcast, you can listen to the full episode by clicking the link down below in the description. You can find us on your favorite podcasting apps, and again, we post several times a week, so if you're looking for market updates throughout the week, this is the place to be. Whether you're in the car on the way to work or something like that, make sure to tune in to get the latest. Thank you very much for watching. We'll see you on the next one.